this presentation by just giving you very quickly an overview of risk layering, meaning the type of instruments that's available to deal with the different type of disaster that we face globally. So if you can see at the bottom, for high frequent events with low impact, there are some specific tools, instruments that we need to consider in dealing with them. And that's have to do with reserve fund, contain loans. And so those type of instruments is something that the governments, are supposed to have with them to retain part of that portion of the risk. But as we're moving higher to the ladder, moving closer to low frequency and high impact events, which means the risks become bigger. So government need to figure out and put in place some proactive measure to make sure that they address effectively, the disaster impact. And in Africa, we have African risk capacity, as you may have on the part of the globe, like the Caribbean, you have a Caribbean Catastrophe Risk Insurance Facility, CRIF, which is another instrument in the Caribbean. But here in Africa, we have African risk capacity. The question now is, who is African risk capacity? So ARC is, I will use the acronym ARC, is a special agency of African Union established in 2012 by African governments. We have a specific mandate, and the mandate is to support African member states to better prepare, plan, and respond efficiently to the impact of extreme weather events, natural disaster, as well as the high consequence infectious disease outbreaks and epidemics. And the goal of ARC is to build resilience, improve food security, and protect lives and livelihoods. So in terms of organization, how do we work? ARC is a two-level institutions. You have one side, the ARC agency, which is a specialized agency of African, as I mentioned earlier, which is a mandate to carry out the sovereign function of the institutions. And it's managed by its member states. So far, we have 35 member states. We are working hard to make sure that we cover the whole Africa. And as part of the IGAD countries, we have 4 of them, Djibouti, Kenya, Somalia, and Sudan. And as indicated, we are in touch with many of the remaining member states because it's a process, as AU institutions to be part of the mechanism. And the role of the agency is to lead the political engagement with member states, as well as lead the capacity building program, which is actually focused on early warning, risk modeling, contingency planning, and risk transfer. On the other side, we have the insurance affiliates that's actually is managed by, it's also established by African government, but with support from donors, but which is with the aim of providing, insurance to African Union member states, ARC member states, I should say. Now, how do we meet the needs of our member states? Which means we need to make available some specific insurance products. We have our software, which is the technical engine, the institutions called Africa Risk View, which is a risk modeling tool and also early warning tools, which also support our member states, in terms of early warning. But again, in terms of insurance products, we have a drought. The drought insurance was the first tool that we actually launched in 2014. And last year, we launched another drought insurance product that covers rangeland, because we understand some countries also, like Somalia, Sudan, have Kenya as well, have, I think the moderator mentioned that earlier, impact, we can face drought impact on livestock. So we developed that insurance product and launched it last year. And again, as you may know, when part of the continents face drought, face other disaster risks. You may be informed 2 weeks ago, Madagascar was impacted by tropical cyclone. So we have our tropical cyclone insurance model that we launched actually in 2020, which actually target Southwest Indian Ocean countries such as Madagascar, Mozambique, Comoros, and others. And Madagascar was the first country that actually took out insurance policy against a tropical cyclone. We still, work to meet the need of member states. So we also have a plan. We are actually in the process of finalizing our flood model, which is actually in the pilot phase, and we are hoping to have it concluded by end of this year. We also develop insurance product for outbreaks and epidemics, just to offer predictable funding to reduce impact of outbreaks and epidemics. We are actually working on 4 pathogens, which are Marburg, meningitis, Ebola, and Lassa fever. And again, we are also developing some extreme climate facility, which is a sort of carbon bond to offer adaptation funding for extreme climate variations. And then we also developing some micro, because when I presented on, the first slide on risk learning, to the bottom of the risk learning, we also think of developing some sort of a quantitative funds and also micro insurance to support our member state to deal with high frequent and low impact events. How do you work at the country level? So at country level, we have a technical work group that we establish when we work with a country, when we say a country is a member of ARC, to go into the process, capacity building process, which work around the 3 main work streams. Number 1 is the risk modeling, is just to build the capacity of the technical group to really quantify the risk that they face. It could be drought, it could be tropical cyclone, and other risks that I mentioned. And then second, to also develop operational plans, specific operational plans that will include the type of interventions and also coordination mechanism that have to be developed before a country can move ahead, decided that I will take insurance or not. And then lastly, also be the catch of the country in terms of insurance, because we know the traditional insurance. But sometimes we can't disaster risk insurance. Sometimes some government acts like something new on the continent. So we need to lead some policy dialogue, train the experts, and make sure that they have the necessary capacity to move to the next step. So when the country go through that process, that our board, the ARC board, confirmed that the country has met all the technical requirements to move ahead should the country decide to take African insurance. But again, we need to, in the process, to make sure that the M&E and gender dimensions in disaster risk management are mainstream across the work that we do. Let me conclude by just sharing some impact on payout and the services that we offer. So in terms of insurance value that we've been providing, so since inception in 2014, we've been able to offer 900 million of insurance in terms of coverage, risk coverage that in drought and tropical cyclone. As I indicated, our flood and other products are still under development, but the 2 products we have launched so far, we have been able to cover that amount of a risk. And then the payout amounting about 90 million has been made to African governments. And so that's up to the season that concluded in West Africa just a few months ago. But in East and Southern Africa region, for instance, we have confirmed a payout, what you call guaranteed payout. As you can see, the agriculture season starts mainly in East and South Africa between October and November, and ends between May and June. So we are, I would say, in middle of season. But with our software that I introduced earlier, we could, at this point, we could know if a country, for instance, facing drought, has a guaranteed payout. And some of them, like Malawi, Zambia, have already confirmed payout. You may be informed in the news 2 weeks ago. On Monday, I shared some news with legal colleagues, where Madagascar have a tropical cyclone insurance policy with us, and the policy trigger with the impact of tropical cyclone Batsure that impacted the countries on February 5th. So the country is getting a payout of 10.7 million, to support the vulnerable community that have been affected by this tropical cyclone, right? In addition to insurance, we also provide so many services in terms of capacity building in disaster risk management, and then also we have innovative solutions such as what we call ARC Replica, which is help our work. I think the previous presenter mentioned how we can work together. So we have introduced that model called Replica that's enable material actors to come into play, to work together with us and replicate portion of the government insurance policy. When there is a policy that it the example, Senegal had a policy, and then they receive a payout for about 12 million. And then the replica partner was Star Network. When they received, they also received 10 million. So together they received 22 million. That's also actually increased the coverage, also their response to the member state. And so far, the partners that we work in replica, WFP, Star Network, and other partners such as the Danish Red Cross are coming on board, to make sure that we work together. So basically, this is what I can share with you in terms of what we do in Africa, in African risk capacity. Let me conclude with two key messages. Number one, just to say insurance plays an important role in disaster risk management. And this role is well recognized in terms of response and recovery, where the rapid and the predictable payout and the resulting effect of smooth and the fiscal impact of shock can be highly valuable. Number two, disaster risk insurance should not be viewed as a standalone tool, but if applied in tandem with other risk measures, can offset the negative impact of recurrent hazard that our continent face. Thank you very much for your attention.